Good morning. Thank you for joining today's daily webinar where we discuss your questions live on the webinar. We also go over certain topics. Today's topic is, can a 1099 employee open a solo 401k plan? We get this question quite a bit, so I'm glad that we are covering it today. As always, today's webinar is for educational purposes. Please also subscribe to our YouTube channel, like our video, and share it with other solopreneurs in your network. We've seen a large increase in self-employed individuals opening solo 401k plans over the last few years. So this is a great way to get this great educational information out to others in your network, as I'm sure they can benefit from it. A lot of people out there have not heard of a solo 401k. They may have heard of a SEP IRA or a simple IRA, but do not know that a solo 401k is generally better than both of those retirement plan types, which are also for the self-employed. Okay, again, don't hesitate to shoot over any questions you have here on the live chat. That's one of the purposes of these daily webinars. So the question is, can a 1099 employee open a solo 401k plan? The quick answer is yes. Yes, a 1099 employee, aka contractor, can certainly open a solo 401k plan. As a matter of fact, a large percentage of our clients are 1099 employees slash contractors. And we're opening plans for those types of individuals every day, as well as other self-employed individuals, whether they are self-employed in an S corporation, partnership, or C corporation, or an LLC taxed as any of the above. Now, if you're a contractor, aka 1099 employee, you would report that earned income from self-employment activity on a Schedule C. So a Schedule C is a tax return that you attach to your personal Form 1040 tax return each year, and you use it to report payments that you receive for contracting work performed. And you're going to report whether it's a net loss or a net profit on line 31 of that Schedule C, and you would uh, uh, add up all of your 1099 self-employment income. So you would add all your 1099 NECs together, and you would report that on the Schedule C, because you may be contracted for several different businesses out there. So doing multiple types of contracting work. So the contributions would be aggregated based on all of your net self-employment income from your 1099 contracting activities. Once you know that line 31 figure that would be populated in Schedule C, that line 31, then with respect to calculating that contribution, you would then plug that number onto our solo 401k contribution calculator. So you would plug in that line 31 number, and the calculator will do the work for you with regards to the calculation, including subtracting 1/2 of self-employment income tax from the line 31. And then you would be able to determine how much you can contribute. For example, for tax year 2024, the overall contribution limit for a 1099 employee slash contractor is $69,000. and it goes up to $76,500 if you are age 50 or older. In 2025, that contribution limit increased to $70,000, plus an additional catch-up amount of $7,500 for those age 50 or older in 2025. And then there's the super catch-up contribution, which is new for 2025, stemming from Secure Act 2.0, where if you are a contractor or an individual that's age 60, 61, 62, or 63, you can contribute a catch-up amount of $11,250 instead of the $7,500. So as you can see, there are great benefits of being a contractor. Not only can you make your own schedule, but you can also open a solo 401k plan and contribute to it based on your aggregate net self-employment income from all of your contracting work. Let's take a look at a few other items here. So from a contractor perspective, 1099 employee that is, you actually have some more favorable rules, such as being able to open a solo 401k plan here in 2025 so that you can still make contributions for tax year 2024. So that's another advantage for a 1099 employee slash contractor, is that you have more time to both open that solo 401k here in 2025 so that you can make contributions in 2024, and you also can make that super catch-up contribution in 2025 for 2025 if you open the plan this year. So let's talk a little bit about the deadline for a sole proprietorship slash contractor, 1099 contractor that is, to open a solo 401k plan here in 2025 for tax year 2024. So the setup deadline for a sole proprietorship so that they can make certain types of contributions for 2024 here in 2025 is going to be October 15 of 2025. If you open your solo 401k plan by October 15 of 2025, you're going to be able to not only make 2025 year contributions, but also year 2024 contributions. And the 2024 contributions that you can make here in 2025, if you open the plan by October 15 of 2025, are both employer profit sharing contributions, which can be made as pre-tax or Roth, as well as voluntary after-tax solo 401k contributions as part of the mega backdoor Roth solo 401k strategy. Now, if you had opened that solo 401k plan by April 15 of 2025, then you would have been able to make all contribution types to the solo 401k for 2024, those being both employee contributions and employer profit sharing contributions, as well as voluntary after-tax solo 401k contributions. So those are good things to understand from a 1099 employee slash contractor with respect to, yes, being able to open a solo 401k plan. Now let's talk about how contributions are reported when you make them to a solo 401k plan. Let's pull up that information here and we'll go over that. So if, again, today we're concentrating on, can a 1099 slash contractor employee open a solo 401k? And as we have discussed already, the answer is yes. Now let's talk about how to report those annual solo 401k contributions once you make them to the solo 401k plan. So whether you make employee or employer contributions, those are going to be reported on your Form 1040, specifically on Schedule 1, which is an attachment to your Form 1040. So that's where you report the employee and employer contributions. Now, Roth employee contributions, also known as salary deferral, Roth solo 401k employee contributions, those do not get reported on your Form 1040 or any uh, tax return for that matter. Now, Roth employer contributions, as part of that Secure Act 2.0, which now allows for making employer contributions on a Roth basis instead of a pre-tax basis, those do get reported. And it's a little interesting because they get reported as tax deductible contributions on line 16 of that Schedule 1, which is the attachment to Form 1040. So you get a deduction for it. However, that employer Roth contribution then gets reported on a Form 1099-R as a taxable in-plan conversion because they go into the Roth solo 401k on the employer Roth side. You get that deduction on the business side. However, it results in a taxable in-plan conversion, therefore comes out to be a wash when we're talking about taxes. Now, voluntary after-tax solo 401k contributions as part of the mega backdoor, those get reported on a Form 1099-R as a contribution. So it's funky. They don't get reported on the Schedule 1 or the Form 1040, but instead they get reported on a Form 1099-R on line 5. And on that same 1099-R, that 1099-R is also issued to report the non-taxable conversion because voluntary after-tax solo 401k funds, when converted, are non-taxable. Unless there's some gains, but typically there are no gains because you typically want to convert that contribution right away when we're talking about voluntary after-tax solo 401k contributions. Now, another advantage about being able to open a solo 401k if you're a 1099 employee or contractor is the auto contribution credit. Let's pull some information on that. So the auto contribution credit is really a way of the government subsidizing your cost of having a solo 401k plan. This shows how much attention the government is paying to solo 401k plans and that they want individuals to open those to help save for retirement so they don't have to rely solely on Social Security benefits. So the auto contribution credit is a dollar for dollar credit where if you open a solo 401k plan, you get a $1,500 deduction dollar for dollar for opening a solo 401k. And that $1,500 auto contribution credit, it's spread out over a 3-year period in $500 increments. So for 3 years, you get $500. You get a $500 dollar for dollar tax credit on in this case, on your tax return. So $500 in 2025, $500 in 2026, and a final $500 amount in 2027. So don't get confused with the tax credit because the tax credit is merely a deductible expense, but a dollar for dollar reduction on your business tax liability is much more favorable through this auto contribution credit. So again, it's $500 per year for a maximum of $1,500 over a 3-year period. So it's spread out over 3 years in $500 increments. And you have to open a solo 401k plan that's offered by a company like my solo 401k financial, whose plan documents and they have the necessary documents as part of the plan that allows for that auto contribution credit. And what's great about it is that you are not required to make contributions in order to qualify for it. So even though it's referred to as an auto contribution credit, you're not required to contribute, and you can contribute in whichever amount you want up to the overall limit. So that's great information to know as well. And then when you make that, when you go to take that $500 credit each year, you need to fill out Form 8881 each year to get that credit. And then you attach that to your taxes. And you can learn more about it here on our website, or you can look at IRS code section 45T like Tom, and also notice 2020-668 for more information. So those are all good items to understand regarding how a 1099 employee/contractor can certainly open a solo 401k plan. All right, well, thank you for joining today's daily webinar. We'll be back live again here at 1 p.m. Pacific time. Again, please share this video with others in your network. Please also check out our community page as well as our solo401k.ai for more information. Until next time, have a great rest of the day.